What is asset allocation for your financial goals? Have you ever wondered how to make your money work for you? Understanding asset allocation is a key step in reaching your financial goals. It is all about dividing your investment portfolio among different asset categories like stocks, bonds, and cash. This helps balance risk and reward based on what you want to achieve financially. Let's break it down. The first thing to know is that different asset classes behave differently in various economic conditions. For instance, stocks usually have higher growth potential but come with more risk. On the other hand, bonds are more stable and provide lower returns. Cash is the safest option, but it typically yields the least. By mixing these assets, you can reduce the risk of losing money if one area underperforms. Your financial goals play a big role in how you allocate your assets. If you are saving for retirement that is decades away, you might want to invest more in stocks for growth. This means you are accepting some volatility. If your goal is to buy a house in a few years, you may prefer a safer mix with more bonds and cash to protect your capital. Another important factor is your risk tolerance. Some people are comfortable with market ups and downs and are willing to take on more risk for the chance of higher returns. Others prefer to keep their principal safe and are okay with lower returns. Your asset allocation should reflect how comfortable you are with risk. There are different approaches to asset allocation. Strategic asset allocation sets a fixed mix of assets for long-term goals and does not change much with market conditions. Dynamic asset allocation adjusts the mix over time based on economic changes while keeping a long-term view. Tactical asset allocation actively shifts investments to take advantage of short-term opportunities. Core satellite allocation combines a stable core portfolio with smaller, actively managed portions for potential extra returns. For adults planning investments, asset allocation acts as a roadmap for making investment decisions. It helps maintain discipline during market fluctuations and supports diversification. This means spreading investments within and across asset classes to further reduce risk. Regularly reviewing and rebalancing your portfolio is essential. This ensures your asset allocation stays aligned with your goals as market values change. For example, if stocks perform well and grow to representing a larger portion of your portfolio than intended, you would need to sell some stocks and buy bonds or cash to restore your target allocation. In essence, asset allocation is a foundational strategy for adults in investment planning. It helps tailor your portfolio to your unique financial goals, risk tolerance, and investment timeline while managing risk through diversification and periodic adjustments.